Good afternoon. The Subcommittee on Capital Markets will come to order. Without objection, the Chair is authorized to declare a recess of the committee at any time. This hearing is entitled, Examining the Agenda of Regulators, SROs, and Standards Setters for Accounting and Auditing. Without objection, all members will have 5 legislative days within which to submit extraneous materials to the Chair for inclusion in the record. I now recognize myself for 5 minutes to give an opening statement. I want to thank you all for joining us today to discuss our financial regulatory landscape. It's incumbent upon this committee to highlight the indispensable roles of Public Company Accounting Oversight Board, PCAOB, the Financial Industry Regulatory Authority, FINRA, and the Financial Accounting Standards Board, FASB, in upholding transparency, accountability, and stability within our markets. However, recent developments have raised significant concerns, necessitating a thorough review of their approaches and impacts. Let's begin with the PCAOB. Recently, proposed amendments, notably the non-compliance with laws and regulations no-clear proposal, raised red flags regarding the potential overextension of auditors' responsibilities. As Chairman McHenry and I noted in a letter to the PCAOB that we sent in August, these amendments not only divert crucial resources from the primary focus on auditing financial statements, but may also compromise audit quality. And the anticipated costs associated with these changes are staggering, potentially comparable to Sarbanes-Oxley. This could lead to an alarming $18.2 billion fee increase, a burden that would ultimately fall on everyday investors. Moreover, the PCAOB's new approach upends U.S. auditor independence and forces them to function as law enforcement agents. Now, turning to FINRA. I and many of my colleagues are concerned that FINRA has strayed far from its original purpose. It has developed into an overzealous and unaccountable, I'm going to say quasi-governmental entity that looks and acts a lot more like the SEC than the member-driven SRO that Congress originally established. The composition of its board, primarily consisting of individuals not directly involved in the industry, raises particular concerns around accountability. And moreover, we have questions about FINRA's leadership's supervision of its operations and activities, including its enforcement function, which market participants tell me is inflicting unnecessary and excessive costs and uncertainty on the industry. As an SRO, we would also expect to see increased formal engagement from FINRA on issues critical to the brokerage industry. These include, but are not limited to, the SEC's proposed regulation best interest, a rule that FINRA has had on its books and effectively enforced for decades, the so-called predictive data analytics rule, which would strike at the heart of the brokerage industry's ability to serve its customers with basic technology, and the substantial costs and privacy concerns associated with the consolidated audit trail. And yet FINRA has declined to provide formal comments to the SEC on many of these key issues, showing too much deference to SEC Chair Gensler's and his progressive agenda. For far too long, FINRA has escaped serious oversight from this committee, and under Republican leadership, those days are over. Finally, FASB's recent initiatives warrant attention, particularly its approach to income tax disclosures and the inclusion of sustainability reporting in its 2023 strategic plan. While supporting FASB's goal of offering valuable information to investors, we must ensure that these new projects are not influenced by activists or serve as a conduit for pushing social and political agendas into generally accepted accounting principles or GAAP. In light of these pressing issues, it is imperative for Congress to closely scrutinize the proposed changes regulatory expansions, and their comprehensive effects on market efficiency, investor trust, and the robustness of our financial systems. I want to urge all panelists today to engage in thoughtful and collaborative discussions addressing these concerns. Congress keeps a vigilant eye on these developments, and it's imperative that our regulatory framework align with market needs, bolster accountability, and stimulate growth while upholding the highest standards of integrity and transparency. So I thank you all for being here today. The chair now recognizes the ranking member of the Subcommittee on Capital Markets, a gentleman from California, Mr. Sherman, for 4 minutes for an opening statement.
Thank you for holding this hearing. Nothing could bring more joy to a CPA who serves on this committee than bringing these witnesses before us. A lot of us in Congress make sacrifices because we want to play an important role in making national policy, so we're a little jealous of the people in front of us since they also make very important national policy, but they get to do so at private sector salaries and with a level of anonymity that many of my friends and colleagues who have had demonstrations in front of their homes could only dream of. We have a democracy in which we elect the people that have governmental power. Okay, with the executive branch, you elect the president who then appoints the people with governmental power. With the PCAOB, you get third degree. You elect the president who appoints an SEC, who then appoints the PCAOB. But with the other two entities in front of us, there is no connection between the voters on the one hand and the exercise of governmental power on the other. It is said that elections have consequences, but not when it comes to the FASB or FINRA. And I'm not surprised at all that the crypto world and the crypto billionaire bros want their own SRO so that they can have a patina of regulation, be in control themselves, and not have that regulation answerable in any way to the American people. We hold the president responsible for the FAA. We hold the president responsible in large part for the economy, and yet the folks in front of us here have very substantial economic impact over which no elected official has much influence, although we do get to invite them here and talk to them. Speaking of listening to anybody, I've been working on FASB to repeal FASB number 2, which requires the immediate write-off of research expenses. So if you build a laboratory, you capitalize the cost of building the laboratory. If you do research in the laboratory, you have to immediately expense and hurt your earnings per share for the work done in that laboratory. It's true that the financial world has adjusted to this pernicious and unjustified and theoretically bankrupt pronouncement. And so they think they're already dealing with it, but I suggest that if we made people write off the cost of building laboratories, fewer laboratories would be built. FASB now has a rule for putting crypto on the balance sheet. I think crypto is a collection of pet rocks, does not belong on the balance sheet. But what FASB has not done is give us accounting standards for ESG, for human resources, or from just basic things like same-store sales. I'm glad that they're working on a definition of IDIBA, but there are so many measures, and in 100 years, very little has been done in the accounting world beyond the income statement, balance sheet, and fund statement. I would say that the pressure on FASB is the only people they listen to are the stock analysts. The analysts do not have the national economy in mind. They do not have in mind the interests of those people who don't use stock analysts but make their own decisions. But what the stock analysts want is for you to predict the future, which you cannot do verifiably, which you cannot do accurately. But what a stock analyst wants to know is not what happened in the past, but what's the stock going to be worth in the future. PCAOB, glad we've pretty much dealt with the China issue. I led the effort here in the House on the Holding Foreign Companies Accountable Act, the Accelerating Holding Foreign Companies Accountable Act, with strong support from this committee, and I want to thank everyone involved. And now Mr. Lukemeyer and I have the Holding Chinese Companies Accountable Act to call for the PCAOB to look at these statements annually. Of course, we've seen the recent $8 million fine of one Hong Kong-based accounting firm. So I look forward to hearing from our witnesses here. Thank you for presenting this hearing.
Thank the ranking member. The chair now recognizes the ranking member of the full committee, the gentlelady from California, Ms. Waters, for 1 minute.
Thank you very much, Madam Chair. Today we will hear what happens when Wall Street and other parts of the industry police themselves. So-called self-regulatory organizations like FINRA are tasked with government functions most Americans would assume are done by government officials, like writing rules, examining records, and levying fines. FINRA, whose leadership is appointed by Wall Street, imposes weaker penalties compared to government regulators. It lets brokers' misconduct go unchecked, permits board member conflicts of interest, and lacks any cap on executive compensation. In fact, FINRA's CEO, Mr. Cook, made $3.6 million last year, which is roughly 15 times the salary of SEC Chair Gary Gensler. Moreover, the Municipal Securities Rulemaking Board has a broad sector-wide regulatory authority similar to FINRA, and it wasn't even invited to testify here today. Reforms are long overdue. I've already started planning, and I hope members will join me in writing legislation to finally rein them in. Madam Chair, I yield back the balance of my time.
Gentlelady yields. Today we welcome the testimony of Ms. Erica Williams. Ms. Williams is the chair of the Public Company Accounting Oversight Board. Mr. Robert Cook. Mr. Cook is the president and CEO of the Financial Industry Regulatory Authority. And Mr. Richard Jones. Mr. Jones is the chair of the Financial Accounting Standards Board. I want to thank each of you for taking the time to be here. Each of you will be recognized for 5 minutes to give an oral presentation of your testimony, and without objection, each of your written statements will be made part of the record. Ms. Williams, you are now recognized for 5 minutes to give your oral remarks.
Thank you, Chairman Wagner, Ranking Member Sherman, Chairman McHenry, Ranking Member Waters, and members of the subcommittee. I'm grateful for the opportunity to appear before you today and discuss our shared commitment to protecting investors on U.S. markets. I'm obligated to note that I am testifying on behalf of myself as chair of the Public Company Accounting Oversight Board, and my comments do not necessarily reflect the views of other board members or the PCAOB staff. I want to start by thanking you for your commitment to holding China accountable. Because of the leadership of the U.S. Congress in passing the Holding Foreign Companies Accountable Act, the PCAOB secured complete access to inspect and investigate registered public accounting firms in China for the first time in history. As a direct result of that access, the PCAOB recently announced historic enforcement actions against China-based audit firms and individuals. The days of China-based firms evading accountability are over. Our work holding firms in China accountable is just beginning. Investors in U.S. markets are more protected today because of Congress's leadership. Thank you for your ongoing efforts. My path to the PCAOB starts with my grandmother. She and my grandfather were farmers in Alabama, and she quite literally kept what little money she had under her mattress. She didn't trust it to a bank, let alone the stock market. The problem with money under the mattress is that it doesn't grow. Building wealth requires investing, and investing requires trust. So when I became the first person in my family to go to law school, I chose to go into securities enforcement to hold wrongdoers accountable and help bolster the integrity of and breed confidence in our capital markets. I'm proud to continue serving investors at the PCAOB. As with our work in China, protecting investors drives everything we do, from workers saving for retirement in Missouri, to families investing in California, to businesses creating jobs in North Carolina because they can raise money through sound liquid markets, to anyone across this country who depends on the integrity of the U.S. capital markets to realize their version of the American dream. Quality audits protect people. And protecting people is what the PCAOB's mission is all about. We have 3 key goals to accomplish that mission: standards, inspections, and enforcement. When the PCAOB was first getting off the ground in 2003, it adopted existing standards that had been set by the auditing profession on what was intended to be an interim basis. Unfortunately, far too many have not been significantly updated in at least 20 years. Our capital markets don't stand still. They evolve constantly. Practices change, technology advances relentlessly, and new risks emerge. To keep investors protected, our standards must keep up, which is why we are working to advance the most ambitious agenda to modernize PCAOB standards and rules. The public comment period is absolutely essential part of that process, and we carefully weigh each and every comment we receive. At the same time, our inspections division is also hard at work. Our teams inspect roughly 800 audits in more than 30 jurisdictions around the world each year. This year, we enhanced our transparency by including a new section on auditor independence and a range of other improvements in our inspection reports. And we rolled out new features on our website to help users access and compare inspection report data. Finally, we are strengthening our enforcement program to ensure accountability, promote deterrence, and protect investors. Last year, we imposed the highest penalties in PCAOB history. This year, we have nearly doubled that record. Our capital markets are the envy of the world, and they are fueled by investor confidence. The role of auditors is to bolster that confidence by providing investors with assurance that the financial reporting they rely on to make decisions is accurate. The role of the PCAOB is to hold auditors accountable for living up to that responsibility. I am proud of the work we are doing every day on behalf of investors, and I look forward to taking your questions.
Thank you, Mrs. Williams. Mr. Cook, you are now recognized for 5 minutes to give your oral remarks.
Chairman Wagner, Ranking Member Sherman, Ranking Member Waters, thank you so much for the opportunity to discuss the important work that FINRA is doing to fulfill our mission under the federal securities laws to protect investors and safeguard market integrity while facilitating vibrant capital markets. And I inadvertently left out members of the subcommittee, so thank you all as well. The last several years have witnessed a period of continuing evolution for the securities markets. Throughout this time, FINRA has continued to adapt and innovate, working under the close supervision of the SEC and drawing on our status as a private, not-for-profit, self-regulatory organization to leverage the expertise of those we regulate, which helps us understand and react quickly to market events, enhance our regulatory programs, promote compliance, and tailor our rulemaking and other initiatives to meet regulatory objectives. This afternoon, I'd like to focus on 3 main areas: protecting investors, maintaining confidence in the markets, and supporting capital formation. FINRA's regulatory programs work every day to protect investors, particularly retail investors and those most vulnerable to potential abuse. We regularly monitor and examine close to 3,400 member firms for compliance. When firms fall short of their regulatory obligations, we investigate and respond appropriately, including through disciplinary actions that address wrongdoing, deter misconduct, obtain restitution for investors, and remove bad actors from the broker-dealer industry. The U.S. capital markets are the best in the world, and while the vast majority of firms and individuals FINRA oversees are dedicated to serving their clients with integrity and professionalism, outliers can pose significant harm to investors. We recently implemented innovative rules to identify and address risks posed by firms and brokers with a significant history of misconduct before they can do more harm to investors. And we continue to prioritize protecting senior investors and vulnerable adults. For example, we adopted a rule permitting a member firm to contact a customer's designated trusted contact person if they suspect financial exploitation and place a temporary hold on questionable transactions or disbursements, as well as a rule that limits brokers from being named a beneficiary or holding similar positions of trust on behalf of a customer. And we are not just focused on senior investors. Research by the FINRA Foundation has shown that many new retail investors have joined the markets in recent years. These investors tend to be younger and more racially and ethnically diverse, with lower household incomes and much smaller account balances. They also report using complex products and relying on social media for investment information. FINRA is seeking to adapt and expand our educational content and other tools to better support informed decision-making by these investors, including delivering content where newer investors seek information. In addition to protecting retail and institutional investors, FINRA in recent years has invested heavily in technology so that we can better protect market integrity by conducting ongoing surveillance of billions of market events each day for potential misconduct. FINRA deploys a range of sophisticated algorithms to analyze market data and detect potential rule violations across markets. We also promote transparency by making information on market transactions available to the public, which helps inform investors and reduce transaction costs. Finally, FINRA continually looks for opportunities to support capital formation. We are consistent with investor protection, both by addressing unnecessary barriers and by stopping activities that could undermine confidence in the capital formation process. In recent years, FINRA launched 2 initiatives to identify how FINRA can support capital formation. These initiatives have produced results, from modernizing our corporate financing rule and public offering system to removing impediments to smaller firms participating in the capital formation process. In conclusion, as the markets continue to change and retail investors are presented with both new opportunities and risks, FINRA remains firmly focused on its statutory mission. We look forward to maintaining our ongoing engagement with Congress, other regulators, market participants, and the investing public. Thank you again for the opportunity to be here today, and I look forward to answering your questions.
Thank you, Mr. Cook. Mr. Jones, you are now recognized for 5 minutes for your oral remarks. Mr. Jones, is your mic on? We're having difficulty hearing you. Pull it a little closer, perhaps?
No.
No, it really isn't, is it? Do we have a technical issue? Can we pause for 1 moment, please? Apologies, Mr. Jones. Okay, looks like we're going to share. Again, my apologies, Mr. Jones and Mr. Cook. We'll try and continue to resolve our technical difficulties, but I think you've got a mic that works, and I would turn to you for your remarks. Thank you.
Great, thank you. And thank you, Chair Wagner, Ranking Member Sherman, Ranking Member Waters, and members of the subcommittee. My name is Richard Jones, and I serve as the chair of the Financial Accounting Standards Board, also known as the FASB. Before joining the board in 2020, I spent over 30 years in public accounting, where I was responsible for interpreting and applying FASB standards across a wide range of industries. That role gave me a deep appreciation for the importance of accounting standards in accurately depicting and transparently communicating a company's financial condition to its investors and other capital allocators. Today, I'm honored to be a member of an organization that plays such a key role in our capital markets. I am also honored to appear before you today and answer your questions. Founded in 1973, the FASB's mission is to establish and improve financial accounting and reporting standards to provide decision-useful information to investors and other allocators of capital. This includes all investors and allocators of capital that use financial statements to make capital allocation decisions, from the smallest pension plan seeking to maximize returns for its participants to the largest actively traded mutual fund. We accomplish our mission through a comprehensive and independent process that encourages broad participation, objectively considers all stakeholder views, and is subject to oversight by the Financial Accounting Foundation's Board of Trustees. Independent standard setting is a great asset and a great privilege. It's a great asset because it allows the FASB to solicit and incorporate diverse views into our process, providing investors and other allocators of capital with relevant, unbiased information in the most cost-effective way possible. It's a privilege because the FASB must continuously earn the right to set standards. Every day, we work to earn the right by engaging in a robust and inclusive and transparent process with the active participation of our stakeholders. We are judged by how well we execute that process. Members of the FASB come from diverse professional backgrounds. While each of us brings different experience to the table, we are equally committed to our mission to provide decision-useful information to investors and other allocators of capital, and the continuous improvement of standards that constitute U.S. Generally Accepted Accounting Principles, or GAAP. Our standards are designed to provide investors and other allocators of capital with financial accounting and reporting information for investment decisions. Even so, we recognize that other parties may choose to use that information as a starting point for other purposes, including regulating certain industries, taxation, and other public policy matters. How and when GAAP information is used and the adjustments that are made is within the discretion of the bodies who choose to use GAAP as a starting point. We are always available to all parties to answer questions about how our standards operate. And we are always open to new ways of increasing participation in our process. History shows that we make the best decisions when we consider all views, which is why stakeholder outreach is at the heart of everything that we do. For our standards to be successful, they must be able to be applied by accountants, audited by auditors, and provide unbiased, decision-useful information to investors and other allocators of capital. The participation of those parties and other parties in our process is essential. For example, during our most recent agenda consultation process, we solicited a broad range of stakeholders' views to help us set the direction of our standard-setting efforts. We went out with an open mind, a clean sheet of paper, and applied a rigorous process. And the feedback from all our stakeholder groups was tremendous, including a 300% increase in investor participation since our last agenda consultation in 2016. The FASB has made significant progress in addressing that input by adding new projects to our agenda, setting direction for existing projects, and executing on that revised agenda. Our work doesn't end when a standard has been issued. Our ongoing post-implementation reviews of the revenue recognition, leases, and credit losses standards continue to help us fine-tune these areas. We recognize that high-quality accounting standards that facilitate the effective operation of the capital markets are in the public interest. The FASB continues our 50-year journey to earn the privilege of setting standards by engaging in the robust, inclusive process that has built the comprehensive body of GAAP that we have today. My written testimony provides more detailed information about the FASB and our projects and activities. Thank you for the opportunity to appear here today, and I look forward to taking your questions.
Thank you very much, Mr. Jones. And before we turn to member questions, the clerk we believe that your mic is reset. Yep, there we go, back in business. Thank you very, very much. I would now recognize myself for 5 minutes for questions. Mr. Cook, as a self-regulatory organization, SRO, there's an anticipation for heightened formal engagement from FINRA regarding critical issues within the brokerage industry. This includes the SEC's proposed regulation best interest, a rule that FINRA has effectively enforced for years. Second, the predictive data analytic rule, which could significantly impact the industry's technological services to customers and the substantial costs and privacy concerns linked to the consolidated audit trail. Let me ask you first, Mr. Cook, has FINRA sent formal comment letters to the SEC on its Best Acts and PDA proposal?
Thank you, Chairman Wagner. We have on the best execution proposal. I don't believe we have on the predictive data analytics proposal.
Are you going to?
We don't have a plan at the moment, but we're still reviewing the content of the proposal, and it's possible that we would.
FINRA has its own best execution rule, correct?
That's true, yes.
How long has it been in place, and how many times has it been updated over the years based on industry feedback, sir?
I couldn't answer that question for you today. I can say it's been a long time that we've had that rule in place, and it's been modified and interpreted with guidance multiple times.
Multiple times. Is FINRA's best execution rule so deficient that the SEC needs to impose its own rule, sir?
I don't believe FINRA's best execution rule has been deficient. I do believe it's important to recognize that there's always been kind of two tiers of regulation here. The SEC's had an approach to best execution through the anti-fraud rules for a long time, and it has had engagement with SROs on their best execution rules for a long time. And so there's been kind of
I'm just concerned about expensive and costly redundancy here, I would say. And let me move on. Chair Williams, I'm deeply, deeply concerned with the PCAOB's no-clear proposal, which could compel auditors to extend their responsibilities far beyond financial statement audits and essentially force them to function as law enforcement agents. Over the last 2 years, more than 300,000 auditors and accountants have left their positions, with many of them citing the regulatory environment as a main factor for leaving. Do you think, ma'am, that this proposal, which adds new liabilities and costs to auditing firms and their employees, will make it more attractive to join this profession?
Thank you for the question. The no-CLAR proposal right now is just at the proposal stage, and it is critical for us to make sure that we're getting public comment on the proposal so that we can make sure that we get the final rule right.
Well, good. I hope that you are taking everything into account here, Chair Williams, from a lot of different stakeholders here. The no-clear proposal is anticipated to have a significant financial impact, with estimates indicating a substantial increase in auditing fees by $18.2 billion, according to the United States Chamber of Commerce, and overall compliance costs possibly reaching upwards of $83 billion, according to the Audit Committee Council. Could you provide detail on the expected surge in auditing firms hiring attorneys and specialized experts to adhere to no-clear, and what estimates has the PCAOB made regarding the associated costs?
Thank you for that question. So the PCAOB has included an economic analysis in our proposal, and we are very interested in making sure that we receive comment on that proposal. We thank you, Chairman, and Chairman McHenry, for the comment letter that you provided. We are reading and weighing every comment that we received. Many commenters asked us to hold a public roundtable so that we could receive even more feedback on that proposal.
Well, I would encourage you to do that. These costs are just exorbitant. We've got accountants and auditors leaving the field, and I don't want to make them police officers. They're auditors. In addition to auditor fees, I'm very concerned that no-clear would result in an audited company needing to spend additional capital and company resources than they would have previously. Could you elaborate on the anticipated financial impact on public companies, specifically on their finance teams and other relevant departments, resulting from the implementation of no-clear?
Yes, we are going to be holding the public roundtable in the new year in response to the comments that we received thus far. And our intent in the no-CLAR proposal is to make sure that hardworking Americans are not put at risk by companies who violate rules and standards. We believe that the auditors currently have a role to make sure that companies are not engaged in fraud, and we are weighing all of the comments to make sure ultimately we get that final rule
My
right.
time has expired, Ms. Williams. I'm so sorry. And if you have any more information regarding this question, please submit it for the record. And I now recognize the distinguished ranking member, Mr. Sherman, for 5 minutes for questions.
Thank you. I think there is support for your work in no-clear, I believe. A lot of investors are at risk when companies flagrantly violate the laws that govern them. Sam Bankman-Fried's just one example, and I know that you'll consult with industry and others and try to fine-tune that proposal. With regard to FASB, you're, I think, making some real progress on software and allowing those costs to be capitalized, or causing, yet software development and other kinds of research are almost indistinguishable as to the accounting issues they raise. And I hope that you would look at not only doing what you're going to do on software, but applying those same standards to research. Congress spends many billions of dollars incentivizing research, and while you can say that your rule of requiring it to be immediately written off doesn't influence behavior, I have yet to meet an honest corporate executive who tells me that they don't care about earnings per share, and their bonuses usually relied on that very figure. But there are a number of other things on the FASB plate. Basically, we have dealt with 3 accounting statements for over a century. The third one is only about 50 years old, and that one is just a recompilation of what's in the income statement and the balance sheet. We need more information where you write the definitions and we can rely on the number. You're working on EBITDA, but that's just a recompilation of numbers you already have on the income statement, maybe a little fine-tuning. Maybe you can give me yes/no answers. Do you currently have a project to define same-store sales?
No, we do not.
How about human resource metrics such as average tenure of each employee or turnover rate?
No, we do not.
And anything on carbon or carbon footprint?
No, we do not.
Well, then you've got a lot of work to do. Ms. Williams, I think we've already dealt with this, but we can count on you to have these roundtables and other discussions as you develop additional roles, particularly the ones that the chairwoman was talking about?
Yes, we are going to be holding a public roundtable on the no-CLAR proposal in the new year.
Okay. Mr. Cook, you now have a system where I can pick the name of an individual broker or brokerage firm and use broker check to see whether it's been designated for malfeasance. But what you don't do is just publish the whole list, so I can just browse and see names that might be in my community. Is there some reason why you don't just publish the whole list so I can look at it?
Sorry, do you mean the whole list of brokers or the whole list of?
Those that are listed in broker check as having had a history of malfeasance.
Well, you can search in broker check. You mean a special list just for those?
Just publish the whole list of everybody who comes up as
I think
malfeasance.
the challenge there is we'd have to define what we mean by malfeasance. Broker check requires a wide range of disclosures in the interest of full transparency, but they're not all the same. Sometimes if you just have a customer complaint that's unverified, you have something in broker check.
And could you just browse the whole list and look at every name and see what complaints or whatever they have?
Well, there's not one specific list for a particular type of malfeasance, but we certainly could consider
Or just
this.
the list including those who have no accusations of malfeasance?
I'm happy to take back whether there's ways we can change the presentation of the database to address
Now, the SEC is currently working on a best execution standard as part of its market equity structure. You have a best execution standard. Have you been talking to the SEC about what kind of standard they might have? And is there a need for us to have a different standard than the best execution standard that FINRA has?
We've had conversations with the SEC about the design of their proposal. Of course, it's important for us that they understand what our proposal, what our rule has covered and our experience with the rule. You know, they've laid out their own reasons why they may want to have their own rule, to be able to enforce it, to be able to define policy. I think the question about duplication is an important one here, and we would need to address that. If the SEC adopts a rule, it doesn't make sense to have firms try to figure out if there's daylight between our two rules and we will need to adjust that accordingly.
If their role's tougher, you might not need yours. I'll yield
Right.
back.
Yes.
Gentleman yields back. The chair now recognizes the gentleman from Oklahoma, Mr. Lucas, for 5 minutes.
Thank you, Madam Chairman. I was a member of this committee during the oversight hearings held to examine the extraordinary market movement back in 2010, known as the flash crash, in which the Dow Jones lost nearly 600 points in just 5 minutes before recovering. In response to the crash, the Consolidated Audit Trail, the CAT, was established to monitor equities and options data across the U.S. markets. FINRA and the national exchanges have adopted rules for the CAT that members must comply with. Mr. Cook, I'd like to discuss the operational costs of CAT. It's fair to say that CAT has been much more expensive than originally anticipated. Does the cost of operating the CAT have an impact on the SEC or FINRA's budget, or are all those costs passed on to the members? How do we do that?
Thank you, sir. Just to be clear, the CAT's operated by the consortium of SROs, and I can't speak for them, but I'll try to answer your question as best
Please.
I can. That consortium filed a rule proposal with the SEC for how the costs would be allocated amongst the SROs and the members of the industry. It doesn't come out of the SEC's budget. It comes out of a fee allocation, and that's been approved by the SEC. We commented negatively on that proposal, I think twice, but it's been approved. It's been challenged in court.
So what steps have been taken to reduce operations costs?
Managing the costs is a critical element here. I want to point out that the initial estimates for CAT were based on an assumption about how much volume there would be, essentially. And those estimates turned out to be way off. We're now seeing volumes that are 10 times what they were estimated to be. And of course, volumes translates to processing costs, storage costs for data, and so naturally the costs are higher. But it's very important to continue to work to reduce the costs. I think there are opportunities to do that going forward.
So continuing down that line, do you have an estimate for how much of the cost of CAT are driven by usage from the regulators and SROs versus simply the processing of the incoming data?
I can't speak for CAT LLC on this, but to try to answer your question, I think most of the costs, maybe 75%, have to do with processing the data. I don't know how much the costs are associated with extracting the data.
Last question on this topic. Is there a mechanism in place for market participants to examine the CAT's funding and decision-making?
The funding went through a notice and comment, sort of an SEC approval process, so there were opportunities for the industry to weigh in at that point. Some people objected to it, as we did. There's also, within the CAT structure, I think there are concerns have been raised about lack of industry participation in it. I recognize those. Again, I can't speak for the CAT LLC, but there's a formal advisory committee that helps provide advice to CAT LLC, but they don't have a voting power.
Chair Jones, you discussed in your testimony how FASB is proactive with stakeholder outreach to identify areas of improvement and to potentially develop new accounting standards. Are there any new accounting standards that FASB is proactively seeking feedback on right now?
Yes, sir. In fact, it's our full agenda. We're benefiting right now from extensive outreach that we did 2 years ago. As I mentioned in my opening testimony, we did go out to our stakeholders with a blank sheet of paper, asking them what should be our highest priorities. I would say we have an investor-driven agenda, and we focus on investors who actually use those financial statements to drive accounting decisions. And as you look through our agenda, those projects will align with that.
Do you believe there are reporting matters that Congress would need to first provide a clear directive on before FASB introduces a change? Or, in other words, what topics must Congress address before FASB can act?
Sir, I can't think of any that we need Congress to address. I think that we are taking our charge of setting accounting standards very seriously, very appropriately, and we're focused on that and solely on that, accounting standards for investment purposes.
On that thought, I yield back, Madam Chair.
Gentleman yields back. The chair now recognizes the ranking member of the full committee, the gentlewoman from California, Ms. Waters, for 5 minutes.
Thank you very much, Madam Chair. Chair Williams, did I understand from your testimony that you're an attorney
Yes,
and you worked at the SEC
yes,
and you were in the enforcement division?
that is correct.
So you came to this job with a great background and experience.
Yes.
Thank you. I understand that there have been Republicans who have criticized you and questioned your ability to lead the Public Company Accounting Oversight Board, or the PCAOB, because they said, oh, she's not a certified public accountant. I want you to know, Chair Williams, that I find these criticisms to be entirely without merit and quite unacceptable. Did you know that all 4 previously appointed chairs of PCAOB were all white men, were also not CPAs?
That's correct.
It is interesting that this criticism is coming from Republicans now that we have the first Black woman serving as the chair of PCAOB. Further, current law limits the number of CPAs that can serve on PCAOB's board to a maximum of 2. This was because Congress designed the PCAOB to have a variety of expertise on its board. Today's PCAOB board already has 2 CPAs. Chair Williams, I know better than most that when women of color rise to positions of power, we're often subjected to unwarranted criticisms like this. So I wanted to set the record straight, and I also want to applaud you for your leadership. For example, the agreement that you reached with China's securities regulator better protects U.S. investors. This is an agreement that none of the previous 4 chairs were able to do. With that, I want to pivot to ask you, Chair Williams, about the independence of auditors in the aftermath of the recent bank failures. KPMG served as the auditor for all 3 of the banks that failed recently, causing many to wonder if KPMG was operating on a sufficiently independent basis. What steps is PCAOB taking to ensure that auditors of banks maintain sufficient independence? What other lessons are to be learned here? And do you have any recommendations for Congress as we continue to look for ways to prevent future bank failures?
Thank you for that question. So auditor independence is absolutely critical. We've taken several steps. First, we've added independence and ethics to our standard-setting agenda to make sure that that interim rule and those interim standards are up to today's challenges. Second, we've expanded the independence that we have, information that we're providing in our inspection reports. And third, when we find independence violations, we don't hesitate to hold those who violate our independence and ethics rules accountable as and that is an example of one of the recent actions we brought in China. With respect to the bank failures from earlier this year, last year in June of 2022, the PCAOB put out an alert notifying auditors that fluctuations in interest rates could pose financial reporting and auditing risks. And then we followed up by adding financial institutions that could be subject to those risks to our inspections as a priority area. So that is an area that we're very focused on. I can't talk about enforcement matters, but know that anyone who is violating our rules, we will hold them to account to make sure that investors are protected.
Thank you very much. To clarify something that I've been thinking about, when you talked about the fluctuation in interest rates, was that caused because of inflation and the securities that they were holding, the interest rates had changed, had gone down quite substantially?
In our alert, we notified auditors that interest rate fluctuations could definitely pose risk to financial reporting and audits.
Thank you very much. Let me go back to Mr. Cook. Mr. Cook, FINRA was designed by Congress to serve the public interest. Unfortunately, Wall Street has gamed the system to stack the boards of their would-be regulators with industry representatives, damaging the confidence of investors and policymakers. To understand how this infiltration of Wall Street interests has compromised the public interest missions of SRO, look no further than FINRA's refusal to rid its membership of high-risk broker firms that prey on investors, targeting communities of color, immigrants, and senior citizens. Mr. Cook?
The gentlelady's time has expired. The gentleman can respond in writing. Thank you.
Thank you, Madam
The chair
Chair.
now recognizes the gentleman from Texas, Mr. Sessions, for 5 minutes.
Madam Chairman, thank you very much for calling us here today, and I think this is important for each of you to be here in front of this subcommittee, and we appreciate you. Mr. Cook, thank you very much. In particular, I've been spending a good bit of time with your organization, and want you to know that I believe that they are attempting their very best to keep us updated on the matters that we have before us. I'm going to make just a general statement here, but I believe it's for Chairman Williams. According to the Bureau of Labor Statistics, over 300,000 accountants and auditors have left their practice in the last 2 years, making a 17% less or a decline in the number of people who are in the industry. A recent survey revealed that the regulatory environment makes the profession unappealing to many aspiring accountants, with 64% considering it is a deterrent from them pursuing their CPA license. I think that our chairwoman spoke about not workload, but perhaps an overabundance of workload, perhaps maybe an activist perspective, as she used that word. And while I do want us to have, and for you to have, and the industry to have, professionals who are up to not only change, but an opportunity to see how professional training they need and to stay after that, I just wondered your perspective about hearing this feedback from people probably who left or observations they had.
Thank you for that question. We absolutely want to make sure that more accounting students are thinking of accounting as a profession for them, and also that those who are in the accounting profession stay. That is how we can continue to protect investors and drive audit quality forward. At the PCAOB, we're doing our part, but because Congress, in your wisdom, when you established us, determined that every dollar we collect from our enforcement matters should go to accounting scholarships. Last year, we provided more scholarships to accounting students than any year in PCAOB history. I also am familiar with the survey that you referenced. The large majority of the respondents in that survey found that people are not staying in accounting or going into accounting because of the lower salaries that the accounting firms are paying. And so that is something that the firms need to address, but we at the PCAOB are working to try to alleviate the economic impact on accounting students by providing scholarships.
So you believe you are listening, you read the report, you've discussed it, and you believe it's because accounting majors are not being paid perhaps as much as they could be in a competitive marketplace. Is that correct?
That was what the survey said.
That's what the survey said. Well, I have no reason really to argue with that. I will tell you that I'm pretty much in touch with people who are accountants and feel like that they believe in their work and the money coexist with each other, and I did not know that, so that's new news to me. Mr. Cook, FINRA's operating expenses were $1.094 billion. It's a pretty big operation. And you expect expenses to increase by 6%. Can you please talk to me about the money and the agency and your work?
Thank you for that question, sir. The FINRA's mission is important, and it's important that we fully fund that mission. Our revenues come primarily from fees on the industry.
That's correct.
Our workload has grown over the years, and so too have our expenses, and we've also made significant capital investments in technology to be able to do our work more efficiently. I think if you look over the past 10 years at the overall growth rate in our expenses and our size, it's been well constrained. Our expenses have grown less than the industry, less than other regulators, but it is an important mission. We have very complex markets that are with lots of investors participating in them, and it's important that we make sure we fully resource our mission.
One last point, Madam Chairman, and that is in working with Mr. Cook's organization. I'm trying to move my work as well as their work more to find answers and away from less investigation and more directly to the problems that people may bring to us. So I just want you to know that we're involved in that. And thank you very much. Thank you, Madam Chairman.
Thank you. Gentleman yields back. The chair now recognizes the gentleman from Georgia, Mr. Scott, for 5 minutes.
Thank you, Chair Lady Wagner. And first, let me compliment you on this hearing. This is a most important issue. It's one that, as you recall, we've been involved in together before, last time dealing with the horizon of the Labor Department. But, Mr. Cook, let me go to you. In your testimony, you outlined how FINRA has been carefully examining member firms for compliance with regulation best interest requirements and discuss your work in holding firms accountable. Very important, when they put their own interests ahead of the investor's interests. Can you provide for us and give us just a brief assessment of the practices of FINRA that FINRA has observed during their review process and through your ongoing talks with firms about their preparedness initiatives?
Well, thank you very much, sir, for that question. Oversight of regulation best interest is critical. It's something we've been involved with closely since the regulation was adopted. We work closely with the SEC because it's their rule and they interpret it. They also inspect and examine for it. So we want to make sure we're closely coordinated. In the early days of the rules adoption, we were looking at the firm's efforts to come into compliance. There are a lot of policies, procedures, et cetera, that they need to adopt, and we saw them do so. More recently, we've been focusing on the substantive obligations, and we do have findings that we share with the public.
And do you believe there is any evidence to suggest that since June of 2019, implementation of the regulation best interest comprehensive framework has failed to work effectively to protect investors and retirement savers, or demonstrated a need to make far more aggressive changes to the existing rules?
I don't believe so, sir. We've seen the rule's still new. It's still evolving. The SEC continues to provide more guidance about the requirements, but it's done some things that weren't there before. We have a national standard, a general principle that you can't put your interests ahead of your investors. You got specific compliance obligations, disclosure, conflicts review, a care obligation. So these all can be examined against. And most importantly, I think, the SEC has created a uniform framework across broker-dealers and investment advisors where substantially similar obligations are owed to both. And from an investor perspective, that's important. It shouldn't matter where you go for your advice, so you get the same protection.
And I will note that in 2022, customers filed 216 arbitration actions alleging a violation of regulation best interest through the FINRA arbitration process. That is more than 5 times as many claims as the year before. Far and away the steepest increase of any type of claim. FINRA has taken serious disciplinary actions, imposing a 6-month suspension and significant fines on brokers who recommended transactions that were not made in the customer's best interest. Madam Chair, I believe that FINRA is doing a magnificent job, and I believe that they are doing it in a remarkable way. And thank you. I yield back the balance of my time.
My good friend, Mr. Scott, yields back, and the chair now recognizes the chairman of the Oversight and Investigation Subcommittee, gentleman from Michigan, Mr. Huizinga, for 5 minutes.
Thank you, Chair Wagner, and to our witnesses. Good to see you all again and at various times and functions over the years. So let me just jump right in. Chair Williams, let me start with you. When Congress created the PCAOB in 2002, the word independent appeared in statute 10 different times. 20-plus years later, do you believe the PCAOB is living up to the spirit of the law that Congress had created and that it is actually independent?
Yes.
Okay. Do you believe that your predecessors were able to be independent and free from politicization?
Yes.
Okay. Now that we've established that, are you required as chair to run things through and receive approval of the Securities and Exchange Commission? I'm referring to new standards, rules, enforcement actions. So really, what level of coordination exists with the SEC?
Well, thank you for that question. So our enforcement activity is independent, and we do not run that through the SEC. If, however, a respondent wants to appeal a finding of a hearing officer at the PCAOB, they can go through the board and then to the SEC and then to the federal courts. And then you asked about standard setting and rulemaking. Once the board has approved their standard or rule, it does go to the SEC for a subsequent approval by the SEC.
So they have to approve whatever you are working on and approve, correct?
In the standard setting and rulemaking area,
Yeah,
yes, sir.
okay. Can Chair Gensler remove you?
Yes, the full commission actually can remove me, not the chair alone.
Okay, so just help me out with this. Let me go back to my original question. And now I'm not saying you as a person, because I've gotten to know you over the years, and I know you are a very independent-minded person, but sometimes maybe the structure isn't allowing you that. So are you truly able to be independent, or is this another avenue for Chair Gensler to impose an agenda?
The PCAOB does act independently.
Okay. Well, my colleagues might remember that last Congress I introduced a bill that would essentially fold the PCAOB into the SEC. You would still exist. But in testimony before this committee, Chair Gensler admitted that the PCAOB was in fact not independent. That is problematic in my mind, and I believe that frankly, politicization has creeped in, and I think Congress should really take a serious look at my legislation. So, Mr. Cook, yesterday, Chair Wagner and I sent a letter to the SEC's Inspector General asking for them to conduct an audit of the CAT, Consolidated Audit Trail, of which you received a copy of. Among other things, we asked the IG to examine the SEC's jurisdiction as it pertains to the collection of PII of American or personally identifiable information of American investors. Are you concerned that FINRA has the authority to access sensitive financial data from everyday American investors in the CAT database without evidence or suspicion of a crime or violation?
Well, thank you for that concern. I think the protection of the data that's in the database is critical. There are safeguards around access. Each SRO that could have access to it is meant to be doing so on a need-to-know basis. I don't know whether that applies to the SEC, but I know it applies to the SROs. So, we have policy and procedures in place to limit who can access it and to make sure there's controls around it. I've said
well,
before,
let me interrupt you there. In the past, you've talked about other approaches, quote unquote, when it comes to satisfying regulatory needs versus concerns over privacy and data security. Can you elaborate on those, what those approaches might entail? I mean, we're having a little bit of this conversation, frankly, with FISA right now. What is the limit of who can access very sensitive information under what circumstances, and do they or do they not need a warrant to do so? So please explain a little bit of your what you think some other approaches might entail.
It's a critical question of whether we got the balance right? Because on the one hand, the data in that database, there are two databases, a transaction database, a customer database. The data in the customer database, it's there to help investigations, right? But if you ask a regulator, do you want more data? They're going to say, yeah, I want more data. But that can't be the only consideration. We also need to think about other considerations, including risk and privacy. Some of the other ideas that have been considered along the way, sir, include limiting who's in that database to just large traders, which would be a small subset of the people who are trading in the markets, having a request response system. So there are some other alternatives that have been considered.
Well, my time has expired. I look forward to pursue that in some written questions as well. So thank you. I yield back.
Gentleman yields back. The chair now recognizes the gentleman from Illinois, Mr. Caston, for 5 minutes.
Thank you, Madam Chair, and thank you all for coming. It's funny, I'm sitting here thinking that with all the hearings we do, if you all could show up at every hearing and just provide accounting expertise to help inform what's going on, it would be helpful. I was sitting here reflecting on this hearing. We are almost exactly a year to the day after John Ray testified here. It was December 13th, 2022, on the FTX bankruptcy. I remember him describing it as a paperless bankruptcy, and all of our chins hit the floor when he said the whole thing was run on QuickBooks. Accountant nerd smiling, we get the joke. I say that with love. I'd like to just dig in a little bit on how accounting standards in the crypto industry have evolved since then. And Ms. Williams, I'd like to start with you because the PCAOB recently issued an advisory warning investors to, quote, exercise extreme caution when relying on proof of reserve reports prepared by third parties, and said, quote, that proof of reserve reports do not provide any meaningful assurance to investors or the public. Could you just explain for us what proof of reserve reports are and why you're concerned? And I would just add before you do that some of the public firms have also raised these concerns. I think Mazars stopped auditing Binance and crypto in 2022 because they said these were being essentially presented as audits that they weren't. So can you explain what proof of reserve reports are and why they're not audits?
Thank you for that question. So proof of reserve reports are reports that accounting firms may put out regarding the amount of reserves that a particular entity has at a point in time. They are in no way an audit, and they're definitely not a PCAOB audit. And we wanted to make sure that we put out a bulletin to investors because some firms that are issuing proof of reserve reports may be registered with the PCAOB, and we didn't want investors misled to believe that those proof of reserve reports were PCAOB audits.
Okay, and just so I understand, the proof of reserves doesn't say anything about liabilities, correct?
That's correct.
And it doesn't say anything about the controls that are in place?
That's correct.
And do they use standard accounting practices, or do they rely on whatever practices the audited firm says to use?
They do not use standard accounting practices, and they are not in accordance with PCAOB standards or rules.
Okay. Well, I'm glad I got that right. I'm glad you're calling it out. I think we're all watching what's going on with Tether and some of the reports from the Attorney General that they may have lied about their reserves and are still essentially having these self-attested reports. Mr. Jones, in all your time as a public accountant, would you ever sign off on a balance sheet that didn't include liabilities, didn't include reserves, and the audited companies set the rules of the engagement?
Not as a GAAP-compliant financial statement, I did not.
Me neither. I want to shift to FASB. In September, you issued new standards, if I understand, require fair value reporting for any crypto that's held on a balance sheet. Do I understand right that exchanges are not covered by that rule?
We issued, for our narrow subset of cryptocurrency rules that would require certain cryptocurrency to be accounted for at fair value. That's because prior to that, we had two different standards depending on what industry someone was in. For example, funds would have recorded crypto and any other investment at fair value. But for commercial type companies, they would have recorded it at lower of historical cost or fair value, effectively a mark to lowest value. So that's the standard setting we did. It typically relates to commercial companies. As far as the exchanges, unless they qualify for some specialized accounting, that would have encompassed them.
Well, I guess I asked because going back to that hearing we had a year ago when FTX was issuing FTTs, that they were both the issuer and effectively the valuer.
So,
Could they still do that under these rules you have right now?
so I can't speak on that fact pattern because I don't know whether they applied GAAP, and if so, whether it was US GAAP or international GAAP, or whether they applied it well. What I will tell you is that our standard excludes related party issued tokens.
Okay. Well, I'm about out of time, but I would hope that this committee can look into this more because we talk a lot about how blockchain is trackable and auditable, and in theory, yes, but I think as we've established, it's not a balance sheet. And particularly as we work on stablecoin legislation, given how big Tether is in the space, I am concerned that the accounting standards we have, through no fault of you all or Chairman, but we need to develop rules to make sure that we don't have this huge or under audited behemoth that's causing collateral damage in the system. Thank you all. Look forward to continuing working on this, and I yield back.
Gentleman yields back. The gentleman from Arkansas, Mr. Hill, who is also the chair of the Subcommittee on Digital Assets, is now recognized for 5 minutes.
Thanks, Mr. Chairman. I'm glad to have the panel with us today. Thank you very much. And Mr. Cook, glad to see you from your leadership position at FINRA. And when Chair Gensler was here a few weeks ago, I had an opportunity to talk to him about the consolidated audit trail, so I thought I would turn to you and start there. I know you've had several questions on it. Is it true that it's 3,000 individuals that have access to querying that database?
Thank you, sir. My recollection is that was what the plan required the capacity to be. I don't have a number for you of how many. That would be something we'd have to get from CAT LLC.
Would you submit that to me in writing?
I will ask CAT LLC if we can get that.
Yeah,
yes.
that'd be very helpful. Thank you. What is your understanding, regardless of whether it's one person or 3,000, as to what the security clearance and background check information of the people available to do that query would be? Is it just a standard, something standard, or is there something special attached to that?
Well, I can only speak for FINRA. We're just one of the agencies that can access the database, but we do have controls around who's authorized to do it, what the circumstances would be, the training they need to go through, and then what the reasons would be for accessing it. There's a narrower set of access requirements around the customer database than there is around the transaction database, which has anonymized information. And I just want to distinguish there. I know you know the difference, but
right.
The transaction database is essential for market oversight. I really think it's the customer account database where people are most concerned about the data privacy issues.
You say it's essential for market oversight, but don't the markets, the SROs and FINRA also basically have access to daily market data?
Not on a consolidated basis. So this was the problem after the flash crash. We have a market with
And how long ago was the flash crash?
13 years ago.
Okay, so we're talking about it, and so, but you could do a sweep exam if you were concerned about GameStop or Apple on any given day in any given year and get all the transaction data pretty much that same day, probably, if not overnight, right?
If we went back to pre-CAT days on the transaction, before you had a transaction database, it would take a lot longer than that to pull together. We don't even have the old OAT system. I know you're familiar with that. That's been decommissioned because of CAT. So the audit trail doesn't exist anymore that used to exist before CAT, at least parts of it.
So during a conference in October, you mentioned that even your 80-year-old mom information would be stored on the consolidated audit trail despite the absence of any investors being interested in seeing her manipulation of the broad market. So that sounds like it's got a lot of data that you don't really need to me.
That's a concern, I think, is did we strike the right balance? If we really wanted to go after, just sort of look for people who are able to move the market, large traders, that would be one way to scale back the scope of this database, just focus on large.
Would you support that if that's how it were scaled back? Wouldn't that be a fantastic way just to even use it initially instead of collecting all this data? I mean, the government does not have a great track record on maintaining privacy or stopping people from querying it, or letting people string concepts together using big data analytics and exposing something that even you say is anonymous?
It's obvious that if you don't collect it, you can't lose it. But I think whether it's the large trade approach, or I think there may be some other approaches too that are worth considering. We're getting smarter about this as we go forward. But there may
Do you have the authority to do that without Congress telling you what to do more directly?
The CAT LLC run by the exchanges and FINRA can engage with the SEC, but it would require SEC approval. That is, it can be done without the authority of Congress, but it would require SEC approval.
But you do think, I mean, just personally as the CEO at FINRA, that would be a much more effective, narrow casting way to
I would love to work with the industry, the exchanges, and the SEC to shrink that database down and still try to achieve the regulatory objectives.
So quickly turning to Prometheum, which is the only special purpose broker-dealer licensed by FINRA. It's essentially a storefront with nothing on the shelves. It's been approved, but nothing's happening. Did you work with the SEC to approve that application, or did you do that solely inside FINRA in the normal process?
Well, it definitely followed the normal process. FINRA decides ultimately on the decision whether to accept the new membership application. This particular application, because it was under the SEC's special purpose broker-dealer no action letter, like other applications we've had for that type of stuff, there are interpretive questions. And so when we get interpretive questions about the SEC's rules, we talk to them about exactly what's required here. But ultimately, the decision is FINRA's to make.
I may follow up with additional questions. I thank the chairman for your discretion. Yield back.
Gentleman yields back. The gentleman from Massachusetts, Mr. Lynch, is now recognized for 5 minutes.
Thank you, Mr. Chairman. Mr. Cook, you've established over at FINRA a crypto hub, right?
Yes, sir.
And you've got what they call a crypto asset investigation team.
Yes, sir.
Over there. So just recently we've had Mr. Changpeng Zhao at Binance pled guilty. I think he's paying a $4.3 billion penalty for violating anti-money laundering rules, and then we're waiting for the sentencing of Sam Bankman-Fried, who he built at least 1 million different investors and stole $10 billion worth of customer funds, and he just was convicted of 7 different counts of fraud, and he's facing, I think, jail time of up to 110 years. These are the 2 largest crypto exchanges in the world. Are there any lessons learned from those 2 cases, setting aside the part that there are no use cases for crypto except for trading crypto? I'm just wondering, FINRA's core responsibility is to protect consumers and investors and the integrity of our markets. And I'm just concerned with the flagrant non-compliance going on in this space.
Well, thank you for that important question. And in part, the Crypto Hub and the Crypto Asset Investigations team and other teams within FINRA, the hub is to pull them together to make sure that we're doing that work effectively and that different parts of FINRA know what other parts of FINRA are doing. You asked about lessons learned. I think that there are probably many, but one of them is that the traditional rules around securities and other regulated products are there for a really good reason, to make sure that assets are safe, that their customers know who's using them and why. So as we go forward, I think those are important things to keep in mind. I want to point out that the SEC has provided some guidance that does allow some broker-dealer, a certain model of broker-dealer, to engage in crypto asset securities activities. So part of the Crypto Hub and the other efforts you mentioned are really to make sure that we're prepared as people apply, as they're entitled to work under those no action letters, that we're prepared to be able to properly supervise them and protect investors.
There seems to be I appreciate that. There seems to be a gap, though. So you have the ability to to regulate, self-regulate members, right? But not affiliates. Is that correct?
That's correct.
So, Ms. Williams, I'm just concerned, let's say an affiliate of a covered, of a regulated entity melts down. We've seen what happened with, I think it was Signature Bank, Silicon Valley Bank, when there was a perception that the assets, and you talked about, the reserve reports, when there was a perception that the assets weren't as valuable as had been posted or reported. When those assets dropped, there was a run on the bank. All the customers started to withdraw their money, and there was a run on that bank. I'm just wondering, with crypto being so volatile, does that present a risk to our system internally, our banking system, our economy, if outliers, people not being regulated, if they crash and burn, can that come back on our banking system if people perceive that there's no strength and not enough assets in that bank to answer all claims?
Thank you for that question. So in June of 2022, the PCAOB put out an alert to auditors warning them of the risks that fluctuation in interest rates and volatility in certain markets could have. And we also have prioritized the inspections of audit engagements involving digital assets and financial institutions that may be subject to interest rate fluctuations, increased inflation, and volatility in digital assets. Those are all areas of focus for the PCAOB.
Great. And I'll just ask this, and I'll take the answer offline. If you could recommend changes to address the special nature of the risks that are being presented by a widening use of crypto, that would be very helpful to the committee. Thank you. Mr. Chairman, I yield back.
Gentleman yields back. I now recognize myself for 5 minutes of questioning. Mr. Cook, we've talked about the CAT quite a bit already. And again, you were in comments you made in October at a conference that were a little critical, highly critical of the CAT. And I understand you told my colleague before, Mr. Lucas, that the consortium proposed a fee allocation split to cover the cost of the CAT. However, given your recent comments, who do you believe will ultimately pay for the cost of the CAT?
Thank you for that question, sir. I'd be speculating a little bit, but if this fee proposal goes forward the way it is designed, there's allocation to the SROs, and then there's allocation to the members. I think in many cases, it's likely to be passed on if it can be. So ultimately, I think directly or indirectly, it's very likely that this will be paid for by investors and by others down the chain.
It'll trickle down and be passed along to the investors. That's what's likely to happen.
I would assume that's the likely outcome.
Thank you. In your view, does the CAT offer improved investor protection significant enough to warrant the ongoing expenses required to maintain this database?
I think that's an excellent question, sir. I don't know how we do surveillance today in this market where you got 24 different securities exchanges, you got lots of alternative trading systems, et cetera, et cetera. How do we surveil for misconduct across those markets without some type of audit trail to be able to do that? That doesn't mean that we don't have to be laser focused on costs. And so I think that's a really good area for us to continue to be focused on. But the average daily trading volume in the US, $600 billion a day, that's a lot of money that's at stake here. So I think investors probably expect that regulators are looking at what's happening across the markets, and that's really the tool that CAT's intended to provide, the transaction database of CAT.
It was also reported that you said it's not too late to do the right thing regarding CAT to fix some of the underlying problems. Can you explain what the right thing that Congress or the SEC should do to fix CAT and to protect the investors?
Yeah, I think that's from the same speech where I was sharing a conversation with my mother, who shared motherly advice that it's never too late to do the right thing. And in the context, it was about if we're collecting more data than we need to about individuals in the marketplace, why we can always change the rules and find a better balance. That's and I think the conversation can go in that direction about, is there a better way to be able to make sure we're doing the regulatory work we need to do, investors expect us to do, but reduce our data footprint if we can.
Any suggestions?
I think there's been some ideas that have been worked on by the SROs over the years, including one that involved a request-response system, so you only pull in the data when you need it. I think now that we have more experience with the database, there are some other ideas about how you could only go out and get the information when you actually need it, so that you're not pulling it in up front. I think those are worth exploring, because I think they could help bridge the difference between, the data use cases and the data privacy issues.
Thank you very much. Ms. Williams, Chair Williams, I'm sorry. Your July opinion article in the Wall Street Journal stated that the audit quality is trending down for the second year in a row. How does the PCAOB define audit quality, and where can I find it? And when you said that the audit quality is trending down, does that mean that there has been an increase in incorrect financial statements? Can you please help us understand the interplay between audit quality, as the board defines it, and the accuracy of the issuer financial statements?
Thank you for that question. So we define audit quality by looking at the Part 1A deficiencies in our inspection reports, and those are deficiencies that are so significant that our staff doesn't believe that the auditor had sufficient appropriate audit evidence to sign their opinion. A deficiency does not necessarily mean that the financial statements are inaccurate, but it does mean that there is a risk that if those statements are inaccurate, the auditor wouldn't find it.
So your definition of audit quality, is that public? Is it written down, or is it just?
Yes, we note that when we talk about audit quality, I always reference that is, in my opinion, based on the Part 1A deficiencies. There are other measures that can be used, but we think deficiency rates are a good way to measure audit quality, because our inspectors are in there actually looking at the work that was done by auditors.
Thank you. I would like to take more time, but I think the chair would be very mad at me, so I yield back, and I now recognize a gentleman from Iowa, Mr. Nunn, for 5 minutes.
I always appreciate a good chair who is so fair. Thank you very much, Mr. Chairman. As I highlighted during the appropriations amendment process with Chairman Wagner, the Public Accounting Oversight Board, or PCAOB, arguably has gone completely rogue under Chairman Gensler by firing all of the previous chairs and replacing them with a board at the entire direction primarily of two senators, those of Elizabeth Warren and Bernie Sanders. A recent proposal from earlier this year, Chair Williams, who's with us today, was the newly replaced board lead, imposed an obligation on auditors to detect and evaluate the companies non-compliant with any law or regulation that, and I quote here, could reasonably have a material effect on a financial statement. Chair Williams, I would like to discuss with you today the PCAOB under your leadership, and specifically non-compliant laws and regulations. I've heard from several of the small public firms in my district that this proposal could triple their annual costs. Roughly $55 billion a year in total, with some even estimating over $80 billion with a B. Given these businesses are already subject to a highly complex and technical laws and regulations, both at the federal and the state level, the vagueness and the complex language in your proposals has clearly created ambiguity that will only lead to adverse outcomes for U.S. business and increase the legal compliance costs that they're incurring. So, I want to begin with this. Chair Williams, how does the board intend to enhance audit quality, as you stated in the Wall Street Journal op-ed from this summer, while at the same time reshaping the role of auditors and extending their responsibility beyond financial statement audits?
Thank you for that question. So the non-compliance with laws and regulations rule right now is just a proposal, and we are very much looking forward to public comments, and we've received a number of comments, and we're going to be holding a public roundtable.
Chair. I appreciate that. So let's go deeper then, because now you're asking for feedback. And so despite these complex and specialized nature of your agency's work, is it correct that the boards only compromise currently 2 CPAs?
That is correct. Under Sarbanes-Oxley, Congress and its wisdom
determined. And of those 2 CPAs, is it also correct that they voted against this?
That is correct.
Roughly 80% of the firms who commented upon your rules are against this. Is that correct?
We have received a number of comments, both in favor of the proposal and against it.
20% in favor, 80% opposed.
I have not done that calculation.
I would hope that you would, because now you're asking people to come together for a roundtable. Why did you not do these roundtables prior to writing this rule?
We did, for the past 19 years, we have received feedback from stakeholders on noncompliance and laws and regulations, and we also have a majority of our staff as CPAs, and they provided the recommendation on NOCLAR that the board voted on.
I appreciate that, Madam Chairman, but at the end of the day, your board, the only 2 CPAs on there, are opposed to this. You're now doing roundtables because Chairman Wagner asked you about feedback, and so you've started this new process of sitting people around the table. Yes, we've always received feedback. This is not new, but having to do the roundtable is a direct reflection of the fact that you're having a full-scale rebellion on your rules coming forward. Wouldn't you press other members of the board? Let's have a conversation here on this. You and the other members of the board decided to press forward when the real accountants in the room told you this is wrong. Why did you make that decision?
So we received a proposal from and a recommendation from the CPAs on our staff, and the majority of our staff are CPAs. Many of them have been working with this standard for many years and have seen ways that it needs to be improved, in addition to the fact that our stakeholder groups, our advisory groups, have for the past 19 years raised issues with regard to the current standard. And so we're just trying to be responsive to feedback, because our ultimate goal is to make sure that we get the standard right for the protection of investors.
Chairman Williams, I think that you need to start listening then to your auditors who are telling you that this needs reform. It is costing all of us more money at our local and small business levels. So let's get one thing straight. Auditors are not attorneys, nor should they have to be. 2, by no means should they be expected to function as law enforcement agents in many of the ways that you're asking them to do. This proposal, Mr. Chair, diverts auditors' attention and resources away from the rigorous evaluating of financial statements, which serve as the backbone for our capital markets across everyone's district and their constituencies, and forces them to become much more a compliance attorney and ultimately enforcer. Please listen to your auditors. Please listen to the more than 80% of businesses and community members who have come back and asked you to change these rules before you put them into impact. With that, Mr. Chair, I yield back the remainder of my time.
Gentleman yields back. Chair now recognizes a gentleman from New York, Mr. Lawler, for 5 minutes.
Thank you, Mr. Chairman. Mr. Cook, my colleagues and I have repeatedly asked you and the SEC chairman what, if anything, the SEC and FINRA are doing to address the threats posed by Chinese-owned broker-dealers to retail investors in the U.S. These firms are regulated by the SEC and FINRA, and yet some of them reportedly have close ties to the Chinese Communist Party. The threats include the potential that millions of Americans' personal and financial information could be easily exfiltrated to entities or individuals connected to the CCP, as they increasingly pressure companies to pursue the party's goals and participate in China's espionage. Generally, Chinese companies are required by Chinese law to share data with the Chinese government. These companies present substantial risk to U.S. individual privacy and national security. This threat needs to be examined when you consider at least one of these companies reported employees and operations in Hunan Province, China. On top of that, Massachusetts regulators recently settled the case with Webull, stating that up until February 2021, the firm did not have a formally designated compliance department. Do you recognize the potential threats to American investors posed by broker-dealers like Webull, Moomoo, and Prometheum with reported ties to the CCP, and have you taken any action whatsoever to address these threats?
Well, thank you, Congressman, for that important question. We recognize the concerns that have been raised. We appreciate the interest in the oversight, and we also appreciate the correspondence that we've had with a number of members of Congress on this front. FINRA's role is to make sure our member firms comply with U.S. securities laws and with FINRA's rules under the supervision of the SEC. So when it comes to, we don't actually regulate direct or indirect owners, but when people apply to be FINRA members, we certainly look at who are those direct and indirect owners, what kind of connections might they have to the broker-dealer, what kind of risks, if any, might that present. But there's no flat-out prohibition on direct or indirect owners from any particular country or any particular party unless they're sanctioned. And if those are steps that we feel like that's a federal regulatory decision, not something for a private SRO to make, we're certainly sensitive to those concerns.
So I'll ask you a simple question. Yeah. Can FINRA decide tomorrow to send its small army of examiners and enforcement lawyers into mainland China and investigate Webull's registered representatives and brokerage operations located there, or use its enforcement authority to compel the production of documents maintained by Webull in China?
FINRA's authority allows it to examine and to people and to collect data, and most
Would you be able to send them to mainland China to do that?
Well, we have the authority to do that, or require them to present where they are, and if they don't comply with
Have
our
you done
rules,
it?
We have sought information at.
Have you sent investigators to
I'm not aware of
mainland
us
China?
actually sending someone over.
This begs another simple question. If FINRA cannot go to China directly, or at least has not taken the opportunity to do so, even though you just seem to indicate you have the authority to do so, to inspect and investigate the employees and operations of these brokers located there or compel production of documents kept by these firms in China, how can FINRA assure American investors that these firms are actually complying with FINRA rules?
Well, the books and records of these broker-dealers are, we understand under the SEC's rules, are maintained in the U.S., and the full scope. And so we do examine for compliance with the books and records that we have, and look at things like how is information being shared, what kind of controls are there around that, and so forth.
You have a high level of confidence on the information that is kept here in the United States versus what Webull has in China?
I can't speak to any particular firm, but I know that this is something that our staff would be looking at. They'd be looking for compliance with Reg SP on that front, which is the Graham-Leach.
But how can you look at it if you haven't sent anybody to mainland China to go look at it?
Well, we can look at what information is available where. These operations that you're referring to are very limited in scope in terms of the number of our overall membership. And so I'm not trying to diminish the issue. I'm just saying, we take a risk-based.
They may be limited in scope of your overall membership, but I think we can all recognize that there's a greater threat to the general public in terms of their privacy and information from these companies that operate in mainland China. Do you not agree with that?
Well, I think there are some jurisdictions that are, we're more concerned about, and we absolutely, if we find they're not complying with the U.S. rules, we initiate enforcement proceedings.
I yield back.
The gentleman yields back. I'd like to thank our witnesses for their testimony today. Without objection, all members will have 5 legislative days within which to submit additional written questions for the witnesses to the chair, which will be forwarded to the witnesses for their response. I ask our witnesses to please respond as promptly as you are able. The hearing is adjourned.